Good morning, welcome to the AUDUSD Securities Markets Update. Beginning with the first day of the week, there were few economic releases and events on Monday. However, the market volatility kept on rising since the first Asian session of the week, and the US dollar also sell-off continued following the disappointing economic releases yesterday, including the Chicago Fed Activity Index, which also posted the third monthly decline in a row away from the market estimates. In addition to that, the existing home sales also, which grew by only 1.2% in February, while the estimates were to grow by at least 2.1%. The euro also advanced across the board yesterday as Mario Draghi increased or showed some positive remarks or some positive tone in his testimony yesterday, leading the euro to rise above 1.09, reaching as high as also 1.0950s in the early morning hours. As for the Asian session today, there were also a few economic releases from Japan and China, which had another notable impact on the markets. But beginning with Japan, the flash manufacturing PMI unexpectedly fell back toward 50.4 in March, down from 51.6 in February, while it had been anticipated to improve further toward 52.1. And this is the second monthly decline in a row and the lowest reading since May of last year, when the index also drops toward 49.9. In China, the HSBC flash manufacturing PMI also came in with a shocking contraction, again declining toward 49.2 in March, down from 50.7 in February, while the estimates were to show another growth or slowdown toward 50.5 only. And this is the lowest reading since April of last year, when also the index was around 48.1. As a result of this news, or the Chinese figures, especially the Chinese figures, the Aussie and the Kiwi eased back again after posting a new session highs before the news. The Aussie eased back towards 78.0 or 78.03 to as low as 78.37 or from 78.37, while also the Kiwi also posted or eased back towards 76.29 after posting a session high of 76.75. As for the European session today, there are many economic releases, or many economic figures will be released from the euro area countries, in addition to the UK, which is likely to have also another major impact on the markets, including the manufacturing and the services PMI, which will be released from France, Germany, and the Eurozone. But first of all, in France, the manufacturing PMI is are expected to be mixed, or the estimates are mixed. France is expected to remain within a contraction, while Germany and the Eurozone is likely to show some improvement. As for the services PMIs, also for France is expected to slow down further, while the German and the Eurozone indices are expected to rise further or to improve further. In the UK, eyes will be on the inflation figures again, which is likely to have another notable impact on the market. Beginning with the year-over-year CPI, the estimates to slow down further towards 0.1% in February, comparing to 0.3% in January, which would be another record low. And a good reading is also possible, given the fact for the continuous decline in oil prices since the beginning of the year. However, the year-over-year core CPI is also expected to decline or to slow down further toward 1.3%, down from 1.4%, and moreover, the year-over-year PPI, the input, may decline toward or by 12.3%, while the PPI output may decline by 2%, which would be also another record low for the year. However, the core PPI again may slow down towards 0.4, down from 0.5%. And finally, in the UK, the housing price index is expected to rise further by 10.2% in January, comparing to 9.8% in December. Going forward to the US session today, we will be focusing on another collection of economic releases, which is likely to have another major impacts on the markets, and eyes will be on, first of all, at the beginning of the session, on the US inflation figures. The year-over-year CPI is expected to post the second monthly decline in a row by 0.1% in February, comparing to the same decline of 0.1% in January. However, the year-over-year core CPI is expected to rise further toward 1.7 in February, up from 1.6 in January. However, despite that, a disappointment is more likely amid the continuous decline in crude oil prices in February, which will also reach the 6 years low. The house price index, or the housing price index in the US, also is expected to rise slightly by 0.5% in January, comparing to another increase of 0.8% in December of last year. Moreover, the flash manufacturing PMI from market is expected to also decline again toward 54.9, down from 55.1, which would be also the lowest reading since almost 2 months. Last but not least, the new home sales is expected, or in the US, is expected to post the second monthly decline in a row, declining by 3.5 3.5% in for them, which would be also the biggest monthly decline since November of last year, comparing to another decline of 0.2% of the month before. Finally, the Richmond Fed Manufacturing Index is expected to rise again toward a 2, up from 0 during the month of March. As for the technical updates today, or this week, especially this week, we're looking at the DAX index again, as it remains near the buying area that we noted last week between 11,810 and 11,714, which represents the 50 and the 61.8% retracement from the lows of March 10th until the record high. Heavy buyers are likely to appear at these levels. However, at the same time, the stops should be reported or are reported below 1100, 11 and 400. As for gold prices, the traders need to watch very carefully today the 1192 very carefully, as a break above that resistance is needed to clear the way for further gains. Otherwise, another decline could be seen back toward $11.70 for now. Finally, we'll talk about the euro. Yesterday, or after yesterday's testimony from Mario Draghi, the technical indicators are rising gradually, and the current correction may extend in the next few days. The next resistance, or next solid resistance, it basically stands at 1190 and also 1.1265, where heavy sellers are likely to appear. As for today, the key supports, or the key two supports area, we have 1.0868 and also 1.0844. As far as those levels hold, another rally or another upside rally could be seen toward the mentioned levels before. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching.